This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, guys. Welcome to Bazaar Morning Call. It's Friday morning and you're joining us live from the CNBC TV18 Motilal Oswal studio. I'm Sonia. Today with me is Surbi and Nigel. Folks, it's Friday, but we have a lot on our hands, really, as we begin the day. Reaction to a lot of earnings, global cues to track, but it's still Friday.
Well,
and that is the most important cue, Sonia.
It is.
And good to have you back, Sonia. I think the experience in Gujarat would have been something special, I think.
It was really good, and great to meet so many dignitaries from across the corporate world and interact with them. I mean, the big takeaway actually for me is that India is standing tall amidst the global peers, and a lot of investments coming through. So it was really fun.
It's no longer +1; it's the only one.
The only one. You coined that. I'll always remember that one. Yeah. But let's kickstart with the day's cues, right? I think the most important cue that we'll work with this morning is the reaction to Infosys and TCS's numbers. And we had spoken about this a couple of days ago as well, as to how the street is looking at some positives in Infy's earnings. This time around, the good part is that there is no negative surprise. There are some, worry points, some cautious points, etc. But the key takeaway is, first, the Infosys ADR is up almost about 3% odd. I guess the street was going in with expectations that there wouldn't be any negative surprise this time, and that has come through, so that's a relief. Also, the constant currency revenue growth, it has declined about 1%, but the estimate was 1.5% to 2% decline. So in that context, perhaps you could see a little bit of up move in Infosys this morning. At least that's what the indications are. TCS, on the other hand, I mean, good set of numbers coming through. Revenues, margins, beat street estimates. The margins, in fact, are up for the second straight quarter. So I think the entire sentiment in the IT space will be upbeat this morning, and that's the big cue. The other thing I'm watching is what happens with Polycab. I mean, a very interesting, turn of events over the last many days. There's a clarification that has come in from the management. They said they haven't received any communication from the IT department. But this is a little bit of loss of trust that we've seen in the Polycab stock over the last many days. Will the street take this clarification positively? Could there be a lot more volatility? Time will tell. But for now, that'll be an interesting stock to focus on. The Nifty has been consolidating around that, 21,600 mark. US markets have been largely flat, but this morning, the Asian markets are doing very well. So most of them actually are up about 1.5%. So I reckon that, this consolidation phase that the market has been in the last many days could perhaps be broken on the upside, courtesy the IT names. But then let's see how the rest of the day pans out. A lot of big numbers coming through. There's HDFC Bank that comes out next week as well. It'll post its Q3 earnings on the 16th of Jan. That's next week, I think Wednesday. So all eyes will be on that and the banking space as well. But IT this morning.
IT and global markets. So I'm calling it sort of a lukewarm setup this morning because we had that US CPI print. It's neither hot nor cold. Yeah. It's lukewarm. So let's just run through the numbers and then we'll talk about more of the internal cues as well. The print, this is December US CPI. This was the biggest watch point for the markets all through the week. So the numbers are out slightly higher than estimates. The number has come in at 0.3%. If you're looking at it month on month, expectation was a rise of 0.2%. If you compare year on year, so we've got 3.4% versus estimates of around 3.2%. So then why did the market recover? The US market, by the way, was pulled back very smartly from the intraday lows on all the three indices. Not just that, look at what happened to the bond yield. The bond yields have actually declined 6-7 basis points. On this print, it's not like the US 10-year topped 4% or moved higher. And that is because core CPI, that actually was in line with the estimates at about 0.3% month on month. So we don't have much of a big reaction on either the US dollar or the US 10-year. They're range bound, very close to the recent levels. DXY is consolidating around 102.2, 0.3. So not much changing there. And as I said, the US 10-year yield actually cooled off, a couple of basis points. It remains below the 4% handle, and stocks also rallied and recovered. So that is the US inflation, picture out of the way, lukewarm. Now, on IT, again, I'll call it slightly lukewarm because this absolutely takes Sonia's point. It's better than, the market's worst fears. We were working with an Infosys, top line decline of almost 2%. Well, at least it wasn't as bad as that. And even TCS posted a 1% growth versus absolutely flat expectations. But, if you go beyond the immediate comparisons, then the body language is still non-committal. The commentary that came through yesterday still repeated a lot of what we heard in the second quarter. So if the market was looking for a big definitive statement saying, okay, the worst is over, demand is coming back, none of those statements came in, neither from TCS nor from Infosys. So while, yes, we'll probably get a bounce, a relief bounce that the numbers weren't a howler, the question is, do these numbers give enough of an ammunition for these big IT titans and the rest of the IT pack to keep taking the market higher? On that, I have my doubts, and we'll have more clarity. We'll, of course, hear from the TCS management in just a bit as well. Oil is another very important cue, by the way, because of the Houthi attacks that were, launched just a couple of hours back in the Red Sea. Both the US and the UK have launched missile attacks, and there's a risk premium again. So Brent, now it's below 79, but it was 79 plus just a few hours back. Last but not the least, let's talk about this range. So the Nifty has been about in a 300-point band. 21,450 on the downside, 21,750 on the upside. My sense is that we could be testing the upper end of the range. The key watch point is Reliance. Move away from IT, move away from what the Bank Nifty is doing or not doing. But RIL, can it show more of that momentum? That's going to be critical for the market. And as Sonia said, last but not the least, even I'll look out for, Polycab. More than Polycab, the question on my mind is, can the market now start differentiating from Polycab versus the other? So will we see some relief buying come in on some of the other stocks like RR Cable and the likes? But I think we've got a pretty interesting setup for the last trading day of the week, Nigel.
Well, that's right. But crude spiking up to around $80 per barrel. That's a bit of a spoil sport. But in the past, the markets have really ignored that because they believe that normalcy will resume. And we've seen in the past as well that demand really is offsetting any kind of the supply. Weaker demand is offsetting any kind of the supply cut. So crude is one factor. That's a bit of a negative. But otherwise, there are quite a few positive triggers. First up, let's pull up the Infosys stock. Yesterday, not at 320, not at 325, but around 328, 329, you had a big spike up in Infosys. Just take a look in the final minute of trade. So normally you'll say maybe there was some buying ahead of the numbers, etc. This is bang 2 minutes before the close. So someone has definitely sniffed that these numbers are going to be very, very good, or better at least than what the street was working with. And that's one factor. But yet, IT will support today. And just to give you a few numbers in terms of how much TCS and Infosys, well, they contribute on the Nifty itself. Close to around 10% comes in from both of them. IT stocks on the whole, all 6 of them, they contribute close to around 14%. So that part of the market will be holding up one end. Reliance Industries, second session running, it comes in late of the day and it plays an absolute blinder. Yesterday as well, 2.5% higher, previous session 2% higher. There seems to be some good amount of buying on Reliance Industries, and that's close to around 10% weight on the index. So you have 14 plus around 10, 25% of the index, 24, 25% of the index could continue to support. The Nifty Bank, that's the one that holds the key. It's been coming off on a day-to-day basis from the high point of the day, and it's facing resistance at higher levels. This week itself, we've seen every time it goes around that 47,700, 47,800, we see some bit of selling that comes in, and that's the way it's panned out all through the week. Goes higher, does see some kind of selling pressure. So the Nifty Bank is currently in the middle of that range. The recent low was around 47. The 20 DMA as well comes in at around 47,837. So it's in the middle of that range. You'll have to see which way is it going to break, because that's bulk of the Nifty. So that's going to be the one that gives it direction. Let's pull up what the FIs did. Not too much. They continue to remain net long. 63% of their positions are on the long side. I was looking at the options data, and you have your two pillars of the market. The 21,700 call, that was fairly active. 21,500 put was fairly active, which brings us to the levels itself. Just going by the options data, going by the trading action, I think the Nifty continues to remain in that range. 21,450, 21,850. Maybe the banking names give us further direction. For the time being, IT supports, but we'll need some kind of a booster shot, because Reliance Industries is playing its role, IT could play its role, but the Nifty Bank, that needs to break out in either direction, and that's what's going to give us, the next skew. So for starters, we open up in the green, but we'll need to build onto those gains. And keep in mind, Infosys ended at the high point of the day yesterday, so part of that positive surprise is already in the price.
Okay, by the way, guys, the Mumbai Trans Harbour link opens today,
yes,
and that is an idea that was conceptualized 6 decades ago. And finally, it's seen the light of day. And, we all go through the Mumbai traffic, right? So I know it's a broad sense of relief that all Mumbaikars are getting.
And this is, more than any other project for Mumbai, this is seminal, because the whole idea was to change the axis of the city from north-south to east-west. You've got land on the, on the Navi Mumbai side to connect the island city with the mainland city, reduce some of the issues that we have in terms of just log jams, lack of infrastructure. This is massive. It's a beautiful piece of infrastructure. Like they say, I'm going to go back and borrow a line from Devian yesterday. Derai, but durust hai.
Yeah, I know. I think it cuts down traffic time from Sivri to the end of the place to about 20 minutes, right? That's really, really quick. All right. Well, our director telling us to move on, so we'll do that. But today we're going to talk a lot about TCS in a bit as we head to the management meeting. But on the equities side, first up, we have a cue coming in from Rhythm Desai of Morgan Stanley, who says going into 2024, India remains a top pick in the emerging market space. He says the fundamentals are underscored by strong macro stability as a result of improving terms of trade, flexible inflation targeting and stable non-portfolio foreign flows. Earnings growth of around 20% annually over the next 3 to 4 years, led by an emerging private capex cycle, re-leveraging of corporate balance sheet and unfolding of a structural rise in discretionary consumption and a reliable source of domestic risk capital.
All right, now let's move on and get you some money market views as well. Lakshman B of Federal Bank says US CPI inflation rose to a 3-month high of 3.4%, leading to strengthening in the dollar index. He says the US 10-year yield traded above 4% levels post the inflation print, and the 1-year USD INR annualized premium traded at a 3-month high, while the rupee yesterday traded at a 3-week high against the US dollar on the back of robust inflows. He expects the USD INR pair to trade in a range of 82.78 to 83.23 in the next few trading sessions.
All right, and on the bonds, Lakshmanan says domestic bond yields fell, aided by expectations of rate cuts by the US Federal Reserve. However, he says the US December CPI at 3.4% and robust economic data could potentially delay rate cuts by the US Fed. He says markets await inflation print for India, which is expected slightly higher, around 5.9%, due to elevated food prices against 5.55% in November. He says coming sessions could see the 10-year benchmark bond yield trade in a range of 7.15 to 7.25%.